Well, welcome everybody. This is our last panel of the day, and our last panel of Deutsche Goldmesse Fall 2022. And I think it's going to be a doozy. I think it's going to be fantastic. As you can tell, I've got invited two fantastic panelists. Tavi Costa, I'm not sure, Tavi, how much introduction you need after your fantastic keynote yesterday, but a portfolio manager over at Crescat Capital, probably one of the most active funds in the junior mining space right now. Well, I'm not sure if you want to, like, one of the most active, okay? Right? And, but definitely you guys made a name for yourselves using YouTube and Twitter definitely to your advantage, creating lots of visibility, amazing macro insights. But you have also invested to, I think it's close to 200 companies by now?
No, let's say 200, close to 200 million, not 200 companies.
Okay, yeah. But I thought it was a big list. That's what was like quite a few. That was you? Okay.
Yeah.
No, but it's like, and you have a geologist on staff, like you're deeply involved in the industry.
Yeah.
Okay. And next to you, we have Randal Van Eijnsbergen. Did I butcher it? Is it properly?
Yeah, that was perfect. Thank you.
Awesome. From Haywood. He's a broker based in Toronto and
Vancouver.
Why did I say Toronto?
That's okay.
It's late. It's been a long day already. Apologies, because we keep meeting each other there.
That's right.
So, no, from Vancouver. Really happy for him to be here. He's a sponsor also of the event, which I really appreciate. And but having a broker on this panel really gives us a bit of a different insight into what is going on as well, because they look at things completely different than me as an investor, obviously, right? So the panel is called "How to Invest in Mining Stocks Today" or in right now, and the emphasis is really on right now and today. Like, we're not going to tell you about, okay, you got to look at management teams and things like that. It's more about timing, looking at things, sort of the themes that are happening in the industry right now as well, like undervaluation. Of course, I mentioned that in my opening remarks yesterday. Is sort of the buzzword, but we'll get to the questions in a second. But trying to sort of figure out, like, what is the right way forward now in investing? And I think I couldn't have picked two better panelists for that. Tavi, do you want to say a couple words about Crescat first? I know I tried to make an introduction. I brutally butchered it.
No,
but
no, we're a macro fund, and we had a very bullish view about precious metals back in late 2018 and early 2019. And like anybody else, we had a view that gold would be higher 10 years from now, and our idea was, how do we make money out of that? And initially, we looked at gold and wasn't going to be a good way to really asymmetrically add to our portfolio. So we started looking at the miners. The miners looked really cheap at the time. We stumbled onto the CapEx trends and looked at how secularly we're seeing a decline in CapEx. And that learning curve really was triggered, and we started taking more risks. So we started investing into developers, and I think it's okay for you to just have a financial knowledge about things to invest in that space. And then we spoke with Quinton Henney, which was Kevin's neighbor. And the short story is that during the COVID recession, we made money on our shorts, and we had a lot of not a lot, but a significant amount of capital to deploy. And we call up Quinton and say, "Hey, Quinton, we're willing to do something here with you." And Quinton was looking for something to do as well, and we started partnering and investing in exploration. Then we learned about the more analysis on the supply cliff issue, and have a firm belief of that we're going to go through an exploration age. And we said, look, we're going to invest in exploration companies, and that's our niche now. I do think there's a lot of opportunities in the space, and hopefully the excitement of new discoveries will bring attention to the whole industry. So that's really the goal.
Oh, fantastic. Great overview, great insights. Randal, real quick about yourself. You're a broker. You want to tell us a little bit what your day-to-day looks like and sort of what Haywood does, maybe just in a...
Sure. I'm going to do that in 20 seconds because, as he mentioned, it's a little different hearing from a broker because we're heavily regulated. So in order to open my mouth up here, I have to read a disclaimer. So bear with me thanks for your patience. Haywood is a Canadian-based and independent full-service investment firm and a member of the Canadian Investor Protection Fund. Viewers of this presentation are cautioned to seek advice of a registered investment advisor. Haywood makes no guarantee, representation, warranty expressed or implied as to the accuracy of the information contained in this presentation or its completeness. The views expressed today are mine and not necessarily of Haywood Securities.
I feel safe now.
Aren't I just... I'm so glad companies don't read the forward-looking statements.
I know. And I actually may have gone over a little bit too quickly. So thank you for your patience. I know that's painful. But we are very regulated, and And sometimes that helps people that are less informed. You guys are all taking the time out to come to something like this, so you're very informed. So you're more aware of the risks the sector has. Vancouver and Canada are really, centers of mining, public companies, and mining companies in general. And so when I talk to people internationally, they don't want to hear about Vancouver technology or biotech or anything. We're known for our mining and resource companies. So that's what I focused on. And I focused mostly on doing financings for small caps, mostly like private placements and things like that, because I think they bring a lot of advantages to my clients. And probably about 70 or 80% of the time, I'm investing alongside my clients. So we're definitely looking at it as a team effort.
Fantastic, yeah. I mentioned sort of the themes of what is happening in junior mining right now. I was privileged to attend a few investment conferences besides ours, obviously. In Zurich, precious metals, I had a lot of meetings with companies. And there are certain themes and certain things I heard more than once, right? One is undervaluation, I mentioned that one. But also it's like, oh, I don't want to raise money at this level. Or, hey, I've had an M&A offer, like somebody offered to take us out, but I'm doing nothing in that regard because we're still too cheap. Right? So, Tavi, maybe first question for you as an investor. What are you looking for from companies right now? And I'm not asking resource or anything. It's more financing terms. If you go in, you say, hey, we like you. What are you looking for?
I think it depends on the profile of the fund. Right now, we see ourselves as a kind of a hybrid venture capital approach of it's almost like owning a bunch of call options that some of them are in the money, meaning they're onto discoveries. Some others are not, and they hold incredible ground and just haven't found anything. And some others are way out of the money. They didn't find anything, and it's just part of the game. So to me, to fit our criteria, after making sure the quality of the assets are there, it needs to have this profile of an explosive move to be worth of an investment. And for us, we're really chasing those large discoveries where you buy companies for 10, 15, 20 million market cap and take it up to 200 million or so. And then you're a large owner of those businesses. You help them to grow, and over time, it becomes an even larger position. So I would say those are kind of the criteria. And it's understanding, I think sizing is a tough thing. And we've been really working on understanding the potential for appreciation of companies in general. And that requires a lot of expected variables that are not easy and change things quite a lot. And so understanding that is key. People looked at Crescat's investments sometimes with a certainty kind of view, meaning Crescat is getting involved. There's certainly something there. And it's not true. I mean, that's not how we view things. It's a probability game. We fully understand that. And the goal is to be able to create more value by bringing Quintin to the table into the discussion of improving the way they're seeing things on the geology side. There is zero advantage for us to be involved with teams that don't need Quintin's help. Which means, they're not bad opportunities, they're great opportunities, but it doesn't fit our style. And so our activist approach is more on the side of helping the companies and not necessarily moving CEOs around and changing things like a Carl Icahn type of activist approach. But there's nothing wrong with that, it's just not our style. So that's really what I'm looking for, and it has to be very viable economically and really high quality stuff that we're looking for.
Yeah. As an investor, and I really try to get to sort of the investor mindset, because right now the investors can be vultures and they can dictate terms, in my opinion, right? So when you say you want to create value, how much, like, the question is like, let's assume a stock trades at $1. Okay. Right? And you say, hey, we're willing to invest X, Y, Z. The amount doesn't really matter, but it's meaningful because oftentimes you are a lead investor in a private placement. Do you come in as like, hey, I want a 20% discount plus a full warrant before I even start talking to you? Like, is this on the table? Yes or no? So
I wouldn't say like that, but yeah, you're right. I mean, I think when we started, there was no buying power from our end, and things have changed. Now, I would say, and I don't say this with hubris at all, and I've just mentioned that, I guess, we've built some credibility in the industry, and some people see it as quite the opposite, which is fine. It's they can have their own opinions. But there are companies that want to get involved with us. So So obviously we have some buying power, I would say, like William does too. And people want to get involved with them. So I think that's key. I think Rick Rule asked a question the other day, which was a really interesting question. He said, are you guys, looking for companies that have that kind of premium from knowing how to tell the story? And certainly they're great CEOs with great teams that know how to tell the story. And they usually get a premium. Not really, because we can tell the story. I'm actually looking for a story that doesn't know that very well, and we can do the marketing for them and let the results do the talking later. But yeah, I mean, and the other thing is, we're not looking for a 20, 30% appreciation. You don't come in with owning 20% of a company and, being able to, sell a little bit of your position here and there. I mean, it's difficult. You're buying a 15 million market cap company. They have zero liquidity, especially in today's markets. You're looking for a multi-bagger as you start. So, and a lot of times that multi-bagger is not a multi-bagger. It's you're lucky if you get one. So I think we've done okay. We found a lot of good investments. And the beauty of now, just to final thought, is that when I think about the portfolio where we have in the money calls, others that are, still out of the money, but not too far, and others that are completely out of the money. Well, I'm looking to add right now is in the money calls because they're all really cheap and their prices is if they were out of the money, which is really interesting. And so you can buy companies that are onto discoveries. They have discovery holes and everything looks really interesting, probabilistically speaking, but the prices are just out of line. And so I think that is very attractive for us.
Oh, absolutely. Yeah, no, fantastic insights. Randal, you're sitting in between chairs a little bit, I think. Like you have your investors, but you also have companies approaching you left, right, and center to support them, right?
Yes.
So what are your criteria in that regard? Like you want to take the best deal to your investors, but you also want to sort of support the companies in the best way possible. And I'm coming back to like discounts on private placement. So how are you approaching that topic?
Yeah, that's interesting how you phrase that question, because I really don't want to support the companies. We want to get involved with companies that can support themselves. So we want a management team that's going to be able to go out there and fundraise regardless of conditions. And those are the kind of people that we're going to back. And so we're seeing a lot of financings coming across our desk right now. A lot of them are sort of more of a desperate nature. These are guys trying to keep the lights on. They've got some results on a property. They want to drill from a different angle or something like that. So, but in order to find the real good ones, you want to find the strong management team. You've heard the criteria from numerous other speakers, so I don't want to bash that to death. But what I did want to mention are a couple of other things that we do. First of all, we try and get involved in non-brokered private placements because you get a discount, you get a warrant or a half warrant. And the fact that the company's financing is a catalyst itself, and that catalyst is, hey, they don't have to finance anymore, so it takes away some of the upside, some of the overhang, which is excellent. And then the other thing that I do that I think is really important, I don't know if anybody's mentioned it, is just when you do consider an investment in a company, go back through the news releases and see when their last financing was. Sometimes we see companies come to market 3.5 months after their last private placement, right? And you know what happens then. So you really want to be aware of what the pricing was, what the terms were, what the incentives were, and who has that paper sort of thing. So you know what you're getting into, and you're not going to be shocked or surprised by something that hits you out of left field. But as far as the other, fundamentals, all of your speakers have really gone over those, and I'm in total agreement. I just acknowledge what Tavi said about getting into the smaller companies that are higher risk, and so to offset that risk, we build quite a big basket of these opportunities. And if management delivers, then we stick with them. And if management has had some issues or problems, then we have to reassess.
Like if you take our agenda, for example, right, you can probably throw a dart at it and you'll find a decent investment because they're like many of the companies are completely undervalued. Not speaking about the quality, but valuations in general are so low. What are you betting on, like first? Like will you be allocating first capital when you talk to your investors? It's like. Because you can pick anyone. Like, where do you start?
I'm not going to answer that question because it depends on the client's focus or comfort level. And I diversify not only amongst geographies and metals, but look for a little bit of a contrarian bent. So something that's had a problem, something that's gone wrong, but it's easily rectifiable, but the share price is down significantly because something's gone wrong. So let's fix that issue. You've got some guaranteed upside from that. So that's one angle to play for sure. Some transformational expectations as far as drill programs, drill results, things like that. But no, as far as getting in on Marcus Bussler's ideas, which were the big caps, or getting in on some of the more aggressive smaller caps that you might get from Joe Mazumdar or someone, I think that you want to be diversified across that space, because as much as the big money is going to come into the producers first, there's still money. If the gold price improves, those juniors are going to double and triple off the bottom.
I've got a question for both of you, and I'm going to start with you, Tavi. I want both of you to answer sort of the same question, because are we in a pull market, meaning or in a push market? Are you willing to sort of put the financing towards the companies? Are you seeking out targets? Or are you waiting to be pitched? Right? How active are you in that approach right now? Because as I said, you can probably pick your winners right now. Are you actively choosing them, or are they choosing you?
No, we're actively choosing them still, I guess. It's no, we've been trying to deploy capital as much as we can. It's been a good year in the macro side, and it's not every year it's like that. We've had bad years in the macro side too, and so we take advantage of those years to deploy capital back into mining. So literally, we're making money on macro and investing back in mining because we feel very strongly about the cycle. I think the majors, it's important to look at them because they're in kind of saving cost mode, and they're not really at the growth mode yet. And I'm waiting, some people are waiting for that. I think we're starting to see some M&A activity that could attract that growth mode to really be started. And when that starts, I think it's going to be very electric in general for the exploration space. But we haven't seen that in a while, and generalists are not really interested. I mean, I speak with a lot of macro guys on my side. They have no idea what we're doing. They have no idea about the companies we own, and it's really interesting. There's not a lot of interest just yet. I keep thinking if we just have the lithium valuations for resources in the gold space would be beautiful, right? I mean, there are companies out there in the lithium space trading at billion-dollar companies with nothing, and it's compared to some of those guys. And I find that very attractive, just from a sentiment perspective. And I speak with a lot of institutional capital, and the first question is, "Oh, it's awesome what you guys are doing, really great. Are you guys investing in lithium?" It's every single time, and it's I think that's going to shift. I think it's just part of the game. We're looking at what's happening with economy right now. It's been of my view that this sort of implosion in the global economy will at some point. Ultimately, we're in this trifecta of macro imbalances. That's not going to change for the next 5 to 10 years. We have a valuation problem that needs to be fixed. We have a debt problem that needs to be fixed, and we have an inflation problem that I don't think it's going away. Yeah, go through waves, but it's going to be here. So those three issues to be resolved, it's going to take a while, and institutions are still going to have to deploy capital in tangible assets. And, we've been chasing, who is the Quinton of energy? And I'm just not calling Quinton a god, anything like that. I'm just looking for expert in the space of other parts too, because I think there are other opportunities, not just in precious metals. We just happen to believe that now precious metals is crazy cheap, even relative to other commodities. So I obviously didn't answer your question and just ramble around, but
the investments choose you, or do you choose the investments?
We choose the investments.
Okay,
yeah.
okay.
And it will always be like that. I don't think it's going to change.
Okay, perfect. Randal, same question for you. I know you work at Haywood, so there's a bit of a process involved, I guess.
No. And
you have your research team.
No, you know what? I'm going to address that because that's a very good point. So I do predominantly non-brokered private placements because the path that a brokered private placement has to go through is more competitive, and it results in a higher price for the issuer. And I also don't want to entertain any brokered private placements, say under $10 million, because if a company can't raise $5 million on its own, I'm not there. So I don't want them having to go to a banker to raise $5 million. So that's the one differential. So our analysts and such don't get involved. with the majority of what I get involved with. However, my network does. And I have wonderful people, many of them here at this conference, and they're smarter than I am collectively for sure, if not independently for most of them as well. And so we come up with a good consensus, and then we say, okay, should we or should we not? And the should we or should we not is in response to a financing proposal that's hit my desk. So I get one every couple of days. Most of them, just might have a few problems with it that we don't pursue. But when I see something that looks very attractive, then I'll put it out to a number of people who I'm fortunate to do business with and who have good opinions. And if I get a good response, then we'll pursue it and take part in it.
Fantastic. You brought up private placements a lot, non-brokered, brokered.
Sorry.
Is that all you do?
It's not.
Or exactly my point is, do you buy in the market?
I do buy in the market as well. Yeah,
Okay.
I do buy in the market as well. And sometimes you just have to when something's so attractive, they don't need money. And there's some examples of that here too.
No, the point is investing right now is the name of the panel, right? So
Sure.
Are you buying in the market? Because I haven't seen too many attractive private placements because of the valuation issue, right? Companies say, well, I don't want to raise money at 20 cents, call me at 40,
Yeah.
right? So that's the sort of the scenario.
Yeah, I bought one of the presenters' shares in the market yesterday.
Fantastic, really heard that? Yeah. Okay. No, fantastic. Tavi, so much similar question for you as well. How are you deploying capital right now in the sector if you're buying? Are you waiting for private placements or are you buying in the market as well?
Well, I think to understand that there's kind of a death cycle in the mining space that I call of an exploration side where companies come in, they bring the wrong investors. A lot of times it's unfortunately broker deals. I don't mean that in a bad way, I promise. But it's just a lot of those guys don't do their homework. They bring in an investor. The company's successful, puts out let's say a discovery hole. It goes from 10 million to 50 million market cap. Everybody sells it back to 20 million or so. And then they get another deal. They raise bad money one more time. They get another discovery hole or something along those lines, if they're lucky. And then guess what? They're back to 40 million and everybody sells it again to 20. And they never get out of that cycle, right? And it's only the big winners that get out of the 100 million kind of barrier. So to us, it's been very important to build good relationships with good investors where we can find a good foundation of capital to come in. So I'm not really looking at deals in general. I'm looking to create new deals that make sense. And so we've been doing that. We have sort of a list of a good list of network of folks that are part of that, and we try to bring the right amount of capital that is with the same mentality of understanding the patients and what we're going after, and trying to avoid what the pikers are, who wants to sell any sort of news. And so that's a very, very difficult part of the whole industry, aggregating capital from the right people. So we're not really looking for broker deals or anything like that. We usually are going to get involved with things that we create the deals. It's in a company that we like. It's maybe in an area that we feel compelled, and there is part of what we call themes, even inside of the mining space. We've got themes in the British Columbia and Yukon and Newfoundland, Bolivia, and some of them we have different views. We have a different view about Mexico or things like that, in which other people have an edge in those areas, and that's fine. There's capital to be made in many different parts of the world, and don't feel angry about my views on some parts of the world. It is what it is. I don't have zero edge on that. So yeah, that's sort of we create our own deals, I think, in majority of times, and yeah.
Interesting. When you say you create your own deals, do you set up your own companies?
No.
Or you create your own private placement because you said, okay, we want to do this. If somebody wants to tag along, that's great.
We've been certainly getting involved with our own companies where we put together most of it sort of behind, I guess not a lot of kind of off the radar, not a lot of people are really knowing that we're doing this, but we are actively doing things like that in small scale. But the majority of it really is, calling up companies that we think are interested in a part of that thesis. Like we recently invested in Rekla Metals, I think, that was just part of our thesis on Yukon, and we called them up and had a good call and learned about the property. Quentin checked on the geology, said, well, look, this looks like an interesting target, and Doesn't mean they're going to hit anything. We're just interested in a story. It looks cheap, and it's kind of in that average market cap that we like to be invested, where we can get a significant percentage of the company. We call them up. Look, how much money you guys need? What are you going to use the money for? Which is another good question, because I want to know that the company is exponentially improving the knowledge about the property, and that needs to be happening. I don't care. I mean, if the companies are not drilling for us, it doesn't fit our portfolio. There are exceptions in that. There's Barksdale is here, and they're not drilling. That's one exception, by the way, which we like, and we understand the story. Now, the majority of the companies we have, they need to be drilling. We want them to be actively looking for stuff, and otherwise it makes zero sense to hold it in our portfolio. I understand there are great companies out there not drilling, not actively doing exploration, and that's fine, but that doesn't fit our portfolio at all.
Randal, sort of as a follow-up to maybe creating your own company. I know cliche question maybe is a lot of brokers work on their own deals. They don't buy in the market. Like, A, question is, does the market need more companies? And B, how are you working? Like, is that something you're looking at as well? Like starting companies sort of from the ground up, finding a geo team, for example, and back them?
I find the model is fraught with conflicts of interest, and that it's not necessarily in the benefits of everyone involved. So, and it's not my primary business. So I've had companies call me before and say, hey, we're doing this seed round of 5 cents. We've just got enough for you, okay? But you can give it to your clients, later time kind of thing. And I said, well, listen, if you give me enough for me and my clients, then we're going to consider it. If you don't, we won't. And then so we hold off. When everybody can play, we'll take a look at it. Yeah. But no, you know what? It can be very lucrative to build your own company. And you know what else is important along those lines is that companies can do direct listings now and things like that, and IPOs are a little easier now because there's outfits that'll give you 200 shareholders at very small amounts. So sometimes you don't have to dilute by going through the reverse takeover process. So it's actually kind of better for shareholders now. They've got a few more options that are more efficient and less dilutive, and they can get their project to market.
Fantastic, awesome. And we got about 3 minutes left. Just let's start with a couple closing remarks, and then let's see if we have time for 1 or 2 questions. Investing right now, if you had one advice or something to give, like you want our guests to sort of walk away from, Tavi, from this panel discussion, what would you tell them?
Well, look, I am very much more focused on the macro side, while I do spend a lot of my time in mining. And so to me I'm really focused on looking for opportunities in the markets right now. Look, I think it's getting more difficult in some parts. Like energy is going to be difficult to make more money, I think. It's a smaller position than it used to be for us. We're still long. I think the mining space is looking more and more attractive. Look, don't take my word for it. I said the same thing a year ago, and it's still the same place where it is now, a lot lower. And so, we've been deploying capital for a while, and value investing analysis is great. I mean, you can buy things that are very cheap, but you need a trigger, a macro trigger. And there are many potential triggers here for gold. It's just we haven't seen that yet, but I feel very strongly that the timing is now in mining. So we've been looking for opportunities in the silver space quite a lot. It's been difficult to find silver stories, but I think there are some of them that are very high quality. We're certainly chasing for that. I think South America will be playing a big role in the world in the future. I think it's a more geopolitically neutral part of the world relative to Africa, for instance. And, thinking about the world and the need for resources in general, I think the partnerships with South America will be increasing. So I'm interested in learning more about other parts. Sorry.
Awesome. Awesome. I want to give Randal also last words, like investing right now in mining. How would you do it? What sort of, or maybe if you can share that advice to your clients right now.
I would avoid sectors that have been in the spotlight, and gold kind of hasn't. Lithium kind of has, and stuff like that. So maybe some gold, and a lot of these things, as you said, are beaten down. So some of these exploration companies that have posted some encouraging results and have the management and the cash to try and replicate or expand on them, I think you can get them for a song right now. So that's a good place to start.
Fantastic. Randal, Tavi, thank you so much for joining our panel. Really, really appreciate it. One question, one short one.
We have the experience that great geologists are often very bad investors. How do you hedge against that risk?
By not being geologists, right, Tavi?
Yeah, that's right. Answer? No, I'm kidding. Well, it's a good question. I mean, how do you measure excitement versus certainty? It's very different. What we found initially working with Quintin, our experience working with Quintin was, let's build a quant model and let's try to quantify your opinions, right? That's the first thing you do. Quintin is like, no way. I mean, this is like my child. I love this company like I love this other one. I'm like, well, which one you like the most? I can't answer that question. Well, I need you to answer that question. So we decided to use metrics. We start slowly building metrics to understand. It's still a learning curve for us. What's the probability of M&A? What's the probability of what we're targeting in terms of ounces? What's the grade going to look like? And those change every week. We get more information. We change everything again. Then we have a new appreciation model. Is the sizing of the portfolio right? So we've been using a lot of quant style investing to help with that. But I don't know if there is an answer for that necessarily.
Fantastic. Awesome. We got to wrap this up here. Perfect. But our panelists will be available, I'm sure, outside for questions. I know we've seen at least one more hand go up. But we're out of time. We have to move on. We're German. We're tight. We run on schedule. So Tavi, Randal, thank you so much.
Thank you so much.
Fantastic.
Thanks very much.
Awesome. You're awesome.